Good afternoon, everyone. It's about 20 to 6 here in the UK, and the trends upwards that we've seen on both sides of the Atlantic are in fact still going. Based on the VectorVest DEW market timing system, the trends upwards started on the 19th of July, about a month ago, and those trends are still running. As you can see, we've got an up situation in the US. The short-term trend of the American market is up, underlying trend is up, and the longest term measure of the trend is up as well. Now, there is one little red flag, folks, in that the market timing indicator, which is a composite indicator which puts together the breadth of the VectorVest composite and the momentum of the VectorVest composite into one single indicator, is starting to get on the overbought side. I discussed this in detail yesterday afternoon with the VectorVest customers, but that's the only red flag in sight. The buy-sell ratio, which is the breadth of the market itself, has still got a way to go before it moves into an overbought area. I suspect, ladies and gentlemen, that even under the most bullish circumstances, we're going to get a pullback soon, but there's certainly no evidence of that this afternoon. So if we have a look at the VectorVest composite for the US, and that's the composite over the last 6 months, I've got the VectorVest DEW market timing signals on this, and that's the buy signal on the 19th of July, and we've had a great run since that. As you can see, the buy signal was preceded by bullish divergence, and this detrended price oscillator is a part of the DEW. And when you get a signal from any system that's preceded by momentum, bullish momentum divergence, it is my belief that that adds to the quality, the reliability of the signal. So if we go back to a 3-month view, a bit more maybe, I'm going to get rid of the DPO for a second because this market's at a very interesting juncture. First of all, this horizontal line goes right back to the February 2020 highs, the pre-COVID high, and the American market has pulled back exactly to that level. That resistance in February, March 2020 became support a few weeks back. Now, whether you believe in the fib sequence or whether you don't, a great deal of traders around the world do, and they place orders based upon it. And if I actually draw a fib extension from as best I can in the time available to me, you can see that the S&P is in fact gone through the 1.618 extension, which is really important to fib players, and then it came back and kissed it. Just remember, most markets test, and moved further, and it's now sitting at the 2.618 extension. Now, it's my experience that markets, when a market extends to 2.618 of the pullback, that very, very few go much further. Now, there's another level, which is 4.23, and if that's the case, that would be an exceptional move. But this is starting to look mature. Those of you that count waves, we've had 5 up here as well within this, what's starting to look suspiciously like a wave 3 up. So this is starting to look very mature indeed. If we look at the S&P 500, we can see pretty much the same thing. I'll put on my fib extension tool from that high down to the low. And as you can see, the highs of today are exactly at that 2.618 extension. Through that, it can certainly fly, and certainly for the last, 3 days now, it's closed on a high. It's got still 3 hours to go before it closes yet, but at the moment, it's on the high of the day. So I think that before we would consider shorting the market, you need to see a couple of distribution days. In other words, a couple of days where it opens at the lows, goes up to highs, and then reverses again, similar to this bar that we had a few days back. I think both from the VectorVest MTI, which is looking mature, and this fib level, I think that we need a pullback. The pullback can easily just be to these highs. It doesn't have to be something that's too onerous, but there's an awful lot of bears around, and if we go back to the view, an awful lot of bears are still arguing that this is a rally within a bear market. So many of them will in fact be taking short positions. There's an awful lot of short positions being initiated at the moment. If we were to have a look at this intraday, where I do my best to make a living, that's what's happened over the last couple of days. Yesterday was relatively easy. It just moved up, and you can see today that today was relatively easy as well, because it came back exactly what happened on the weekly chart, where support, resistance became support over a 3-year period or 2-year period, and this is the highs of yesterday. Well, that pivot high came back and kissed it today. That was a pretty easy short. Your humble correspondent is long from here. If I'd been awake, I should have bought there, but I didn't. And I bought into this just here, and as I say, it's gone right to that 2.618 extension. Not a great move, but there's 20 points in the bank there, and you can't sniff at that. In the UK, folks, well, we have a pretty similar situation. Everything is up. The MTI is not as stretched, getting there, but not as stretched as in the US. Nevertheless, our market, it is my experience, will follow the American market whichever way it goes. Commodities are having a really great day. I see Blackrock Wool Minerals is well up, and clearly those of us that have got Tongela stocks, that's produced an outstanding set of results yesterday. So especially those people that got in way back, their dividends have paid their purchase many times over. That's the beauty of the stock market. Yesterday afternoon at our Q&A, there was a little bit of consternation about Airtel Africa, and Airtel Africa seems to have found some support today, so let's just watch that over the next couple of days. I'm about 55% invested in the UK. A little bit of a slow start in this run-up, because on the 19th of July at the buy signal, I was unfortunately not around, but nervous at this moment that we could see a little bit of a pullback. Nevertheless, the move up has been incredibly strong, and with any luck the pullback will be quite shallow. So I hope that you found that useful. If we go back to the real time, we can see that we need to get, for the bullish case, we need to get through that 43.12 level, folks. It's having a good day, and the only reality is the trend, and the trends are all still up. Thanks very much.